This is very different than anything that the markets have traditionally worried about. It's not about the debt limit. It's not even about contentious policy writers. It's really about Senator Schumer's wanting to fast forward a fight over immigration and to vent his caucus's frustration. So
your base case is no market impact. What happens, though, if noon passes, there's no deal, we start stretching into the back of the week? Then do you think we have to start paying more attention?
Yeah, I think that's the case. I've seen that some houses have suggested that there could be a 0.2% type hit for each week, even though that would be recovered later on. I think the bigger concern here, though, is something that's harder to discern, and that is that it's entirely possible that we do get a vote to do this today, or it gets resolved by Wednesday or Thursday, but that just begets another trigger point in early February, where once again we're going to have the same sort of suspense and drama, and that could even push back to the debt limit, which has to be done by March. So slowly but surely, I think Senator Schumer is in a very crafty way, is sucking Republicans into a debate about immigration, which is going to really step all over the president's State of the Union address and his desire to move towards infrastructure.
So now people will talk about March as the deadline because of the March 5th issue with the Dreamers. You're saying March is far more important to the market because all of a sudden we get these one short-term funding bill leading to another, and then you need to raise the debt ceiling.
Right. I think that's always been much more important. By the way, though, Kelly, I still think you still have a market that I'm a fan of Dr. Ed Yardeni, and Washington typically just generates these panic attacks, which the market gobbles up and generates more fuel for the next leg up. So, and frankly, we've heard from folks like Joe Livornia this morning who are more concerned about the Fed having an itchy trigger finger. So this could even add to a perfect Goldilocks type environment for markets for some time. I don't think, in other words, that this is really that worrisome.
Chuck, despite that, if we are heading for an environment where you think we're just going to continue to kick the can down the road until we get the debt ceiling debate in March, does that not mean that it's very unlikely that we get any more significant legislative measures passed before the midterms, and the tax reform bill, as positive as it was for the markets, is the only thing really that we're going to get until late this year at the best?
Yeah, that may be the case, Wilfred. Again, what kind of dies hard here is the hope that the Republicans might have pivoted off their successful passage of the tax reforms at the end of last year and their ability to really work with President Trump to move, right in and try to continue that momentum to try to work infrastructure reform, or infrastructure investment, which the president is really expected to pitch very strongly in a State of the Union address on the 30th. Now, frankly, it's doubtful the shutdown will last past that. But for the most part, the immigration issue kind of lingers, and immigration was always going to be very tough. We were contrarian optimists just because we were expecting the momentum to continue. But now I think that becomes less likely. And I think one of the real things to watch is whether you start to sort of see the weaponization of anything that's bipartisan, particularly a bill that those in the financial industry are looking forward to, which is a bill to provide regional bank SIFI relief, or the designation of banks as systemically important. That has bipartisan support. The question can be whether the bipartisan support for that and the 11 Democrats who are on board right now can hold the ranks, hold the lines, if you will, against what could become big pressure to back off.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.